Powerhouse Netflix. Today's date today's date is 7/24/2011, 8:32 a.m. Pacific Standard Time. Netflix is going to report earnings on Monday. Netflix does report on the 25th after the close tomorrow. And what we're going to take a look at here on Netflix is that we put the 52-week high in at 304.79. Since we had that last 3-day breakout above this rising 10-week moving average, and the public model is very bullish and has been for last over a year and a half. We're pulling back to the low here on Friday of 270.55. That's about a $34 correction going into the earnings season. We do know that below the market that the 20-week moving average is 249.46. We do know that every time that the bear gets involved and all the pessimistic gets involved in Netflix, we keep making higher highs all the way, and have for a considerable period of a long period of time. How do we trade Netflix before the earnings? Is that we use the options. And basically the weekly chart is very bullish. They have pulled the stock back. They have shorted it down. The bears are heavy on the short going into that report. Rather the bear is right or wrong, the bear has got a lot of problems to think about going into that report, because any upside earnings in Netflix is going to break that high up here on a gap, and we're going to go higher. But vice versa, if it does miss its earnings, which is okay too, it's going to come down and test where this major weekly breakout, and we know that the 20-week moving average down here is at right about $250, okay, and that we could easily gap down on a bad report to there as well, and we're okay with that. On the monthly chart right here on Netflix is that we have a monthly rising monthly. Now this is monthly, and these monthly moving averages that I gave Ken Flagg are $225 to the 10-month. Of course, the 20-month is way down here, and this is where the breakout started in 2010 with a rising 10-month moving average. There was nothing that ever said to get out of this stock. Nothing. However, because of the controversies on Netflix, the analysts have one view. Some are very pessimistic and some aren't. The investment community in itself is dealing with another phenomenon as delivering video content, like your movies that Netflix has. Netflix delivers those by mail, but now they're going to be delivering content through the internet for the downloads, and they're going to get more where Netflix next biggest growth is going to be outside of the US. They're going to get logged into different parts outside of the US called emerging markets in different countries. They raise their prices levels, and everybody thinks that that's real negative, but Netflix has performed. Basically, when you go into an earnings season of this magnitude, it's about how do I manage risk. Well, here's how I manage risk. Over here on Netflix, I've got a $250 put. We know that the $250 put is where those weekly moving averages and things are. And the put option over here was as high as $22.80. And now that $250 put hit a low of $3.23. Now it closed on Friday at $6.39. Already made a 100% move from the lows to the highs here, or close to it. So this is the side of the market that we would use options for in case Netflix wants to plummet. That's one scenario. The next scenario that we look at is a August $320 call. They were $12 up here, $12.78. And they've taken about $8 premium out of the call. Now, back over here was the time to buy the call at about $2, and it went up, made its high, 304, and these went to $12. They're not inflated. They're deflated. They deflated the call, and they've deflated the put because we pulled back $34 and people are wondering, well, I only got $3 premium out of here. These are still deflated. Both sides have priced in what they're doing here. This is wholesale, so we buy some put options just in case it wants to go down. But then again, over here, we buy the call side up and out of the money. And they're both August contracts. The $300 call, which currently is about $30 below the market. The high over here, which was set on 7/13, these were $22 on the calls. The low of those calls back over here on 6/23 were $2.56. That's 10 contracts. When Netflix was breaking higher and doing its thing, they got up here. Of course, they were inflated, and the stock in the short term at 304, 52-week high, was overbought. But here, nonetheless, this call contract just hit a low of 676 on Friday on 7/22. And having a $300 call is a way to play Netflix. So let's say you have 3 contracts, something cheap, not a whole big exposure. Your upside is here on a good report. You break back up above that $300 handle and test that 52-week high, these contracts are shooting up here like a rocket. A $230 put us at $1.30 here. This is a way, and they close at $2.25. So what I'm saying, MMTs, is that the high of the put, the moral to the story, that they're $14.67 on 620. When we had the breakout to the 52-week highs, they took all this premium out of the put. But since the time that those mathematical trading weeks were happening, both long and short, is that we have pulled the $230 put. So Netflix closes. If Netflix drops $30 or $40 in after hours, well, history has a repeating itself. So by having some put options over here to protect, let's say, the call options, let's go back to the 320 call, up and out of the money at both extremes. The 320 call, if it was to drop in value, so you lose value here, MMT, but this put option is going to pop way up here. You're still going to win money no matter what, no matter how it trades. You lose some money over here if it goes down, but this side's going to pop up, and this side of the market is cheap. And basically, this is going to hedge the total earnings report on Netflix tomorrow night. We'll be doing the Baidu one. Once again, for Ken Flagg, I will put in the video here all of the call contracts that we're looking at. So we can take the 220, we can also put the 230 in here. We can also keep a look at the 250 in here below the market, and we can monitor that $300 call against this $300 put. So I got a $300 call and I've got a $300 put as well that we're going to monitor. These contracts up here are a weekly, 722 weekly. Okay, so it's very cheap for me to, so if Netflix is going to make a big move right after the earnings come out, no doubt about it. So if I go to the weekly contract right here, you can see that this is a $300 put, and you can see that this $300 put going into this earnings. Now, let me tell you something, MMT, and you've all learned this. This thing up here, this high up here, look at this. This thing right here is inflated going into the earnings. Look at it. There's the trading ranges. They're up here around $25 now. Okay? And this last daily one right here. You can see down here. The high of the put was $29 on this weekly level. Look at that. That means that this is inflated. That means that this whole contract, if we get a good pop and get back above $300, all the bears that got puts right here on this weekly contract, they're at high risk, because you're already extremely inflated. And that Netflix has already pulled back $34. That's why these put options are up here at the high. Now, if I take another weekly one, we're not doing the August one, where I'm going to show you on a weekly now that expire. I'm going to go down here to a 250 put right here, and it's a weekly contract, and they too are, you don't trade much on the weeklies because they come out every Thursday, but these are up at the highs too. However, by looking at the weekly versus the monthly, which is the monthly expiration, the 820, 820s are the best trade for Netflix versus these weekly. There's a lot of manipulation, a lot of mechanical gimmicks, a steal premium on both sides. So we will monitor the weekly one because we will be trading it right the next morning when it opens up on Tuesday morning. Something's going to happen big in the weekly options, and we'll trade those after the earnings report come out. Before the earnings report come out, though, we're going to go with this right here. The August contract, the 250, and the August 320 call up and out of money. That's upside volatility. This contract here is the downside volatility. The dollar cost risk management is that we're not buying retail up here in the contracts. We don't own them up here at $15 for crying out loud. But we're looking at, if I want to trade this 1 year, I'm going to trade that 250, and I'm also going to trade the 225. So the 225 is a different cost structure. However, if Netflix does a downside volatility on the earnings, drops $30, well, these make a lot of money. These are the trade management scenario on Netflix earnings tomorrow. Tomorrow, when we open up on Monday morning, Netflix has already sold off $34 going into the report. So what basically was happening was that the bears have been shorting that 52-week high, and we all know one thing for sure, that the bear always comes out on the short end when it comes to Netflix, meaning that they lose a lot of money, the bears do, and very seldom do they make. However, even if we do drop down and they make some, they'll never know when to come out. So basically, if these were to pop up here, and these were to drop down to 50 cents here, we would cash out the put over here on the highs and make our money, and we would buy the 320 call down here. If it drops down to 50 cents, we'd buy the 320 call. We can't lose money. And it gives us a way to trade Netflix before the earnings come out. Netflix is going to make a move tomorrow, one way or the other. So we may have to transact this right. If they decide to run Netflix higher into the earnings tomorrow, then that means that 225 put, that means that 250 put for August is going to come down in value. So if we go higher intraday, this put here at 639 could drop all the way down to $3. And we would get that part. We already got some of the calls here at the wholesale price at the low. Not a full position, just some of a position. And we're going to lock in those other positions before the earnings using calls and puts, and by understanding the bull rally in the equity on the monthly level and the rising 10-month. And it's been a great rally from $100 to $300, for crying out loud. And the low was 173.50 on the monthly breakout. And we went up here, as you know, is 304.79. And the support level, as far as the public model goes, will be this right here. This is where that resistance was, and we broke above it right here in the month of 7/1. So, welcome to the Netflix trade, MMTs, and we will very much enjoy it. This is the earnings preview using calls and puts before the earnings, looking at wholesale value on puts and wholesale value on calls, dollar cost risk management to both sides of the trade, makes a very fine filet, what would they call it? Filet mignon. And a lobster tail to go with it.